I'm Shannon Murphy. I'm the Director of Employer Services. We appreciate you taking the time to join us today, particularly trying to join it for the second time. So let's not waste any more time. We'll just get started. Today's program will be broken into two different sections. The first section will be kind of just navigating the website, how to actually use the website, the functions of each button, where you go to see information. Then we'll come back into a PowerPoint presentation and we'll go through service credit, how service credit is applied, and then the proper use of each service correction code. We'll take a 15-minute break. And then when we come back from the break, we will actually go from start to finish through a monthly deduction report. So we'll go through and fix all of the errors and exceptions, do adjustment records, handle missing people, and we'll get it from importing up to pending. So that will be the second portion of the program. If you have any questions as you're going through, obviously send them to the chat. I will stop at various points during the presentation to see if there are any comments that need to be read out. Today, it's mostly just live demos. There will be some minimal PowerPoint. Just a few pointers on just some general information on monthly deduction reporting. Obviously, we no longer accept paper reports. It's been a very long time since we've taken paper reports or floppy disks. Everything is done electronically through MyTRS. Everyone knows, hopefully, that deduction reports and your payments are due to us the 10th of the following month. So today is May 21st. Your April report was due to us with the payment on May 10th. That was a Sunday, so obviously May 11th would be when it's due. Please make sure that your monthly payments and your deduction report total are the same before you send the report to pending. A caveat to that, particularly for newer people, just to make sure you're not basing the payment on the report you are importing into MyTRS. There should be an independent report in your payroll system that shows you how much you took out in MTRS deductions for all of your employees for the whole month. The reason you do not base it on the report you're importing into MyTRS is that the criteria for that report isn't set so that it will automatically pull anybody that had MTRS deductions. Depending on what payroll system you use, there's different criteria. If you happen to use Munis, which I know a lot of people do, if you do not fill in the retirement maintenance screen for a new employee, they will never pull into the deduction report, even if you've taken deductions. Same for Harper's. I think they have an MTRB tab, or it might have a new name now. If that's not populated, even if you take MTRS deductions, they will not pull into the report. A few other payroll systems I know have a little checkbox that needs to be checked. So those are the reasons you don't base your payment on the report you're importing into MyTRS. You always want to use that independent report from your payroll system to make sure it's accurate. The payment can be sent to us via check or EFT on the website. If you are paying via check, the only thing you send in with the check is the monthly deduction submittal form, which can be found on our website. Those go to a lockbox in Pennsylvania and get processed through the bank. We do not actually ever see those submittal forms. Those just go to the bank. It may be beneficial for you to make a copy of that before you send it off, so that if your ESR rep needs access to help you find possibly a variance each month, that we have that form that we can reference that sometimes can point us to what's causing the variance. All right, without further ado, we're going to jump into MyTRS. You will see like up here, it says tabs 6 through 18 in the training book. That is referencing the actual physical training books we mailed out in the winter of 2021. The same version of the book, slightly more updated, is available online under our training resources. So you'll see at the top of a couple of the tabs later on when we're doing more PowerPoint stuff, where in the book, it's referencing that information. So it can be helpful for you. All right, we're going to jump into MyTRS. You're going to continue. So I just want to jump to the homepage real quick as a reference. Under the news section, it's important to pay attention to this section. Every month, at the beginning of each month, we will list when the website will be down so that we can run our mock warrant and then the real warrant. The website is always down for 3 business days so that we can run the warrant. We just had the warrant earlier this week, so the message is no longer up here, but at the beginning of every month, you will see it. It will also give you any retiree insurance deadlines will be listed there. So when you log in each month, just make sure you're reading this so that you're not planning to do your deduction reports on the day the system's going to be down. So just pay attention to that. We're going to jump into deduction reports. So again, we're just going through how the site actually works, what the buttons do. So you'll see any deduction report that is an initial status listed here. This defaults to initials because these are the reports you actually have to work on. If you want to see all of your reports, whether it's been released or it's in pending, you would simply remove that filter right there. You can also go to the filter here, select released if you want to see them. There are no released reports for this fake school. You can do pending. You'll see a bunch of pending reports here, but it does automatically default to initial because those are the ones you need to work on. To open the report, you click on the transaction ID over here. This takes you to a summary page where there's a bunch of buttons. Validate button, very important button on this page. You always click validate before you go to edit details, always, without exception. If you were just in this report 3 minutes ago and you come back to here, always click validate. So I'm going to click it. We're going to confirm what it's doing with the validate. It's checking all of the social security numbers, making sure that everybody in the report is actually registered as an employee of your school. It's checking their events to see if they've been terminated or possibly on a leave. It's checking your calendars, making sure all the pay dates are in there, making sure you actually have calendars. So it's very important you click validate every single time before you go to edit details. That way it's pulling in all of the most current information. I'm going to come back to edit details at the end of these buttons because that will take us into the deduction report. The comments button, you can always see your comments without opening the report. Say you were in here, you're done, you were working on it, and you forgot to export your comments. You don't have to reopen the report. You can just go here, export the list. You can add a comment if you need to, post it. It's going to refresh the screen for a second. You can delete a comment if you need to. You can see I spelled it wrong, so I'm going to delete it. You can edit an existing comment that you have. You can filter. You can do anything you need to do with comments without opening the report. Close that. Submit, obviously, is the last function that you would use. It's the one that it's the button you actually use to send the report from initial into pending so that your employer service rep can actually audit the file. This little ellipsis over here has two options, view details and delete. View details literally just opens the report. It does not allow you to make any changes to it. I don't know how often you would use it, but it is there if you need it. If you want to just export something, you can just hit the export button, filter. You can do all of that. You just can't make any changes. If you ever need to delete an entire report, you would do that here. Really, that's probably rare that you would have to do it. The only case I can really think of is if you have done your report a little after the fact and all the salaries are incorrect and you want to make a change in payroll and rerun it, then you might have to delete your original one, but you would do that here. The override button, this is your second to last step. You would change it to yes and then click save. By saying yes there, you are basically saying that you have done everything you were supposed to do. You've fixed all of your errors. You have looked at all of your exceptions. You've added any comments that are necessary. You're certifying basically that all of the salaries, position codes, pay frequencies, all of that is accurate and that the payments and the deduction report total match. So that's kind of your sign off saying we're good to go. I've done everything. You can also run the exception report without going into the report. You just click this button. Generates the exception report in Excel like you're used to. You can see it here, format it, print it, whatever you need to do. You can also see the summary report without going into the report. That's the report that just gives you the basic statistics of your file, how many records are in it, how many errors are in it, 65. That's a lot when there's only 38 records. It gives you your exception total. Some people like to run that before they start working on it, just so they can see what they're up against. You definitely run it before you submit to make sure that your errors are at 0. And that's going to take us back to edit details. So edit details is usually where you would go after you click validate. This will open the deduction report itself and allow you to make any necessary changes. You can run the exception report from here. This is where you actually see all the data. So we're just going to go through each of the buttons on here, and then we'll jump to the next section. So again, comments are here. Same as they looked when you were outside the report. You can add comments. You can export the list if you want. Just exports it to Excel. You can format it however you need to, save it to your hard drive to keep it for next month, print it, whatever you need to do. You can export it. We do recommend exporting them each month, especially if you have somebody that is due a refund of deductions or you need to collect extra deductions. It gives you the listing right here of who you need to do that for, how much, why. If you keep a record of it, it makes your next report easier when you actually have to do the adjustment records. The copy selected button, this is most frequently used when you have to create an adjustment record, but if you ever need to make a duplicate record of somebody, this is how you would do it. You would just literally click the checkbox over here to select the row, click copy selected. You'll see now Amanda Apple has 3 records instead of 2, and 2 of them have the pay date of 5/30. So it's an exact copy of the record that you've selected. Again, typically it's for adjustment records. We change it to adjustment and go through the rest of those steps, which we'll cover in the second half. Add new, again, it's probably not used super often. If you have to add somebody to this report from scratch, say you were going through, you see somebody's missing, it's just one person, you're just going to manually add them in, you would do it using the add new. So you would click add new. It's going to create a blank row at the top. You simply type in the social and click tab. It should pull in, if the person is registered at your school district, it should pull in their name. And then you just tab over. If the name hasn't changed, if this person's name really is still Stu Dent, you do not need to fill in the reported last name, first name, middle name, or suffix. And you would just go over, hit the tab button. You change this to normal. Not showing up right now for some reason. You would click the calendar, add the pay date in, tab over, enter the deduction, whatever it is in your payroll system. There's 2%, you would enter that. You just go through, fill it out all manually. Cross, if there's no coaching, just 0, put zeros wherever there is no earnings. FTE, again, their salary. You're basically just filling it all in from scratch. This person is an occupational therapist, contract term. You would pick the contract term, pay frequency, and pay duration as appropriate. And then you would hit apply. That's how you would add a record from scratch. Once it's saved, you can actually then duplicate it. If they were paid twice, you don't have to create both from scratch. The delete button, if you accidentally have maybe an extra row by mistake, you got a little click happy with the add new, or there seemed to be a delay, so you clicked it again. If you ever need to delete a record, just click the checkbox and hit delete. You do not want to delete a record where somebody really was paid and had MTRS deductions. Even if perchance they weren't supposed to have MTRS deductions taken, if they did, they need to remain in the report. The export function, this can be very helpful for a few reasons. So the export will export the entire data grid for the entire report. If you have a filter on, it will only export what you have filtered on. But hitting the export will create an Excel file. Primary reasons you may use this if there is a variance. The fastest way typically is to do an export into Excel. You can use formulas to figure out, compare that to maybe your accumulators report. If you use Munis, your deduction listing report, if you use a Harper's product, there's different reports you can compare it to, and it's easier if you do it in Excel. You can just click the export button. It's going to create an entire grid of everything that you have in the report. Another good use of the export, you can use then filters, formulas, whatever you need to. Another good use of that function is if you want to start to create a list of who needs codes every month. right? So if you have somebody that started the year late and you prorated their pay for the whole year, you know that you're going to have to use the mid-year hire code every single report for the whole year. Sometimes that list can get lengthy. You can actually, when you're done, export this and you'll see what codes to use for the following month as well. So that can be a handy feature. The filter button is something you use probably pretty regularly. I'm going to collapse it all so you can see the different criteria. You can filter by basically any header in this report. One can filter by name, which is probably the most common, social security number, pay date, FTE, position code, base, literally any field. It can be as broad as you want, or it can be multiple fields. You could say, show me everybody named Smith that is a teacher and was paid on June 12th. If for some reason you needed to know that information. The point is it can be as broad or narrow of a search as you want. I typically search by name. So I would just, you can enter any part of their name. So if I were to search by my name, I can do Shannon, I can do Murphy, I can do MUR. It's going to pull up anybody that has those letters in their name. So if I search for APPL, it's going to show me anybody that has APPL anywhere in their first or last name, those combinations. So it brings up Amanda Apple and Amy Appleton. Maybe I only want to see one of them. I'm going to filter down a little bit further. Say I only want to see Amy Apple. Click apply. And you'll only see Amy Apple. Typically, if you are going through the report person by person, which is the way we recommend you do it, I would not remove the filter and then search for the next person. It does take a long time and it's kind of a waste of time. If you remove the filter, it's going to regenerate your whole report. And I know some of these reports are very large. That's going to take a lot of time to regenerate the whole report just to have it filtered down again. I would recommend going back up to the filter, going to the name. Again, you don't want to click it here. That also clears the filter. Just go here and type in the next name. You know, maybe you need to look at Paul Pencil. Just redo the name and it will refilter. So it's only going to regenerate the screen the one time. If you remove the filter, it regenerates the whole report. Then you filter and it's regenerating the screen for what you filtered by. So just don't remove the filter. Go person by person and it will go a little bit quicker for you. The more button, there's two options here. There's modify selected and then modify. If you use modify, it's going to modify the entire report. That would be very, very rarely used. I really only know of one instance in real life out in the wilds where a school had their base pay was reported as base pay, but it was also for some reason pulling in to the installment field. So these values were here in the base where it belonged, but also in the installment field, which is a deduction field. So it showed they owed like millions of dollars in deductions, which is obviously not correct. They were working with their payroll system to get that fixed, but in the meantime, they had to get it out. And instead of going person by person by person to change it to 0, they could use the modify function. You do want to make any change, apply any changes you've made prior to using this, or you will lose them. So they would just go up to installment, put in 0, hit save, and then it would just update the whole report. It would remove all of those incorrect values that were in the installment field for them. It's really the only use that I can think of that has been relevant where something would need to be changed for every single person in a report. So it's not likely you will use it, but it is there should you need it. Modified selected will modify only the records you selected. So if there's something that people have in common and you need to adjust it, you can do that using the modify selected. So we'll go and say, show me everybody that has a pay duration of 12. So I know everybody gets a lump sum. I want to see who has pay duration of 12. It will pull everybody up that has that criteria. There are 18 people. You can see here, 18 records, page 1 of 2. I want to change them all to lump sum. If you have multiple pages, this does only update one page at a time. So you can select the checkbox up in the header. It will select everybody on that page. say Brendan Boss shouldn't be updated. You just uncheck whoever you don't want to update. Recheck it if you need to. Go to modify selected. I'm going to say yes. I'm going to change the pay duration field to lump sum and hit save. Now keep in mind the filter for pay duration of 12 is still on. So it should no longer be 38. It's only going to show who's left. And then I'll do the second page, again, unchecking Bernard Boss. Go to modify selected again. Say yes. Change the pay duration to LS and click save. You want to say yes. And that will update all of those people. When it's done saving, there should only be 2 records for Bernard Boss left because he's the only person that still has a pay duration of 12. So again, it's not something you'll probably use super often, but it can be helpful if you need it. The next button over is the customize columns. If you click on that, it's going to show you all of the columns that are available and in their current order. If you want to hide some of these fields, because it is a lot of scrolling, as you can see when you scroll down, there's a lot of scrolling over to the right to see data. It's a very wide screen. If you want to hide some of the fields, you can do that. To hide them, say we want to keep name. I'm not interested in reported first name right now, or the middle name, or the suffix. Maybe I don't want to see the rate. Whatever you don't really want to see, even if it's just temporary, you just select it, click the left arrow, and they'll be hidden over here. So you can see that they're currently all here, and then you click apply, and you'll see at the bottom of the screen, it's changed. Those fields are no longer visible. So you can see a little bit more information without scrolling as much. If you say, oh, I really do want the first name, you can select it, and just click the right button. If you want to go back to the way it was, just click the reset button up here in the top right corner, and it will reset the screen, hit apply, and then close, and everything will be back where it started. So it can be a handy function if you need it, if you want to hide some stuff to do a little less scrolling. There is another option to relocate the file, the different columns. It is currently not working, but it is being fixed, but I'll show you how to do it so that when it is back up, it will work for you. You would just use your 4-way arrow on the equal sign here, and you would literally just drag and drop to where you want it. If you're scrolling from the bottom, just drag it up. Like I said, it's not currently functioning properly. It is being fixed, but I want to just so you know that it is an option when it's back up. You can move some of the more relevant fields closer to the name field if you'd like. Then you would just hit apply and close, and you would see the new order has taken place. If you really hate the horizontal scrolling, you can do a single view row if you want. If you click on that, it's still scrolling. It's just now vertical scrolling. So it's just one person at a time. Still a lot of information and a large screen, but it's only one person. And then you would toggle between your records this way and back and forth. If you want to go back to the grid, you just click that button again. The exception report button down at the bottom literally generates the exception report, same as it did outside. It's typically what you would click when you first come in. Here's your exception report. Format it accordingly, print it, save it, however you work on it. Same for the export summary report. It's the same as it functions outside the deduction report. Just opens the report in Excel for you, gives you your stats. The cancel button, if you click the cancel button, it's going to close the report. We're going to go back in. I have to click validate again, even though we were just in it. I need to click edit details to open it back up. Apply saves your changes and keeps you in edit mode. So as you're going through and you're fixing Amanda Apple and then you hit apply, it stays there. It saves Amanda Apple's changes and then allows you to go to the next person. If you hit save, it saves and then closes the report. So you really only hit save at the very end. So when you're done working on the report for the day or you're going to lunch, click save, and it will actually close out the report for you. One last thing, just to note, each of these headers is actually sortable. So if you want to sort the report by name, just click on the name. You'll see that there's a downward arrow. It's in alpha order. If you do it again, it's going to be in reverse alpha order. You can do this for any screen or for any of the column headers. If you want to sort by name, if you want to sort by pay date, position code, whatever you want to sort by, literally just click the word and it will sort it. Click it again and it will sort it in a different order. There we go. Okay. We are going to click save to close the report. Are there any questions on that section? No? Okay, seeing no questions, we'll move back to PowerPoint and we will discuss service credit. Okay, so service credit. So again, you'll see at the top, tab 19 in the training book, that's in the physical book. If you're on the online version, there is a tab talking about service credit and understanding the service correction codes. So in this example, we're using 26 as your pay frequency, just as a default. It is the most common, but if you offer 21, 22, 42, 52, whatever, 27, whatever your pay frequency is, you can plug it in place here where you see 26. So a service credit is applied once we release each monthly report, and it's per pay date. So if you have a person that is on a 26 pay frequency, for each check they get that is a full check, they will get 126 worth of credit when we release the report. So at the end of the school year, they'll have 26 out of 26, which is a full year of service. There are, however, situations obviously where base pay does not equal one of the pay frequency. It's not a normal 126 of their annual salary. So depending on the situation, service credit may or may not need to be prorated. So prorated service amounts are calculated by dividing the member's base pay by the full annual salary. So if your rep, or me, if I'm your rep, is always harping on make sure the salary is correct. We always need the full-time, full year annual salary. This is why it impacts the member's service credit if it is incorrect. So service correction codes, you'll see those in the drop-down list when you're in MyTRS, can alter a member's service credit. So it's important to know how to use the codes correctly so that their service is either prorated accordingly or not prorated. So we have an example here. John Smith is a full-time employee. He has an annual salary of $52,000. He is on a 26 pay cycle. So we expect each of his paychecks to be $2,000. That's what he gets. He's moving on. Everything's grand. For every one of those checks that he gets $2,000, he will receive 0.038461 years of service. That's 126 worth of service. Unfortunately, John is going out on an unpaid leave, and he works for a school that settles up and then drops off. He will drop off of payroll until he comes back from his leave. So his last check before going unpaid is for $3,400, which is obviously more than his $2,000. So they've settled up, said you've worked, 30 days this year. We owe you this much money. Here's the balance of what we owe you for what you've worked. It's $3,400. Since this is John's last pay before he goes unpaid, his pay has been prorated. The correct code to use in this situation is the payout code. That way he will get the additional service that he's owed for time worked. So if you use the payout code, he will receive 0.065385 years worth of credit, which is the $3,400 he was paid divided by his annual salary of $52,000. A common mistake in this scenario would be somebody using the unpaid admin leave code. If you use the unpaid admin leave code here, John will only get 126 worth of credit, which is 0.038461, as we mentioned. So using that code, and if it's not caught, he will actually lose 0.026924 worth of service credit. I know when you're seeing in decimals and it's small like that, it doesn't seem like a lot, but when John is running his report or he goes to retire, he's going to find out that he has lost a little bit of credit. So it's important to know how to use those codes properly. And that's what we're going to talk about next. So we're going to go through each of the codes and when to use them. A common one you would use is unpaid admin leave. So the unpaid admin leave code is really used when somebody is just docked randomly. You're expecting them to be in. They had to call in for one reason or another. They did not have any paid time to use, so you have to dock their pay. Maybe it's a day or two, maybe it's a few hours here or there. They're expected in. They're not on an approved leave. They just didn't show up for work for whatever reason, and they did not have paid time to use. You would use unpaid admin leave in that scenario. You would also then just add a quick note to the report saying, you know, John Smith docked 2 days on June 13th. Snow day, we don't use it very often, but if you do have to dock somebody's pay due to an unpaid snow day, you would use the snow day code. The next one is also not used very often, disciplinary leave. This is when you are docking somebody's pay. If they were suspended without pay for a day or two or whatever, you would use the disciplinary leave code. We would ask that you would put in a comment. It's extremely rare that somebody has to use this code. So we would be looking for a comment to say, you know, John Smith was suspended without pay for a day, just so we know that you actually used this code intentionally and didn't accidentally select it. Another one that's not used very often is the unpaid strike day. If there is a strike ever and you do dock people's pay, you would use the unpaid strike day code. Again, we would just add a quick note, you know, there was a strike. The code was used properly, because we don't see it very often. All right, now we're getting into the ones that we see a little more frequently and are a little more common to use. The salary change mid-period code. The original intent is when somebody's annual salary actually changes after the start of the new year. So maybe somebody showed they got their master's, they moved from a bachelor's 45 step 6 to a master's step 6, and you recalculated their base pay as a result because it happened after the beginning of the year. That's literally when you would use the salary change mid-period code. That's the original intent for that. It's no change in FTE, just their annual salaries changed. If your superintendent or principal's got new individual contracts after the start of the year and you recalculated their base pay as a result, again, salary change mid-period, just add a quick comment saying what they changed from and to. Another use for it is when you accidentally overpay or underpay somebody. On the check where the mistake is made, you would use salary change mid-period, and also on the check where you're correcting it. So this most likely happens typically in September. You have a lot of new people, a lot of people to manage. It's inevitable. You are going to put somebody on the wrong step and scale, or you forgot to update it. They're still being paid on last year's step and scale. You would use salary change mid-period. You just put in a quick comment. John Smith paid on, you know, master's 6, but he's a master's 8. He was underpaid. You'll overpay him on the next check to make up for it. You would use salary change mid-period in that case. The next one is mid-year termination or death. This is when you are paying somebody out their final pay. It's prorated due to them leaving before the end of the school year. So if somebody resigns in April or November, you're paying them out, settling up for how many days they worked, you would use the mid-year termination code. We are looking for a termination event in the system that corresponds to that. So if they have left, you do the termination and you use the mid-year termination code for their final check. Mid-year hire. So the mid-year hire code was originally designed for when you had staff that started after the school year started and you are prorating their pay as a result because they missed a day or two. It might be 6 months they missed, whenever they started. If their biweekly pay is prorated as a result of starting late, you would use the mid-year hire code. Maybe it's just their first check. Maybe they started, you know, maybe they only missed the first 2 days of school. You're going to prorate their first check, and then after that, they'll be fine. You would just use it on that first check. If you prorate them for the whole year due to their late start, you will have to use the mid-year hire code all year on every record. So that is the intended use of mid-year. That's the original use for mid-year hire. We do also use it for off-label instances as well. If you have somebody that changes FTE in the middle of the year, or sometime after the school year started, somebody went from 50% to full-time or 70%, that's a change in FTE. You would also use mid-year hire. It will prorate their service accordingly, right? So if somebody was 50% and they go to full-time, obviously they should get more service. The mid-year hire code will ensure they get the proper service. Same for pay frequency. If somebody is set up for 26 pays at the beginning of the year and they say, oh no, I wanted 21 or 22 and you need to change it, that's going to alter their biweekly pay, of course. And if you're prorating that due to what they were paid initially, again, you would use the mid-year hire code. When you are using the mid-year hire code for a change in pay frequency or a change in FTE, you do need to add a comment because they're not a true mid-year hire. You would just put in just brief comment, John Smith changed from 50% to full-time or 70% down to 50, effective on this day. Same pay frequency changed from 26 to 21 or vice versa, effective this day, just so we know that it's not an actual mid-year hire. Another scenario, if somebody, this also typically happens in September, if new people are not getting their paperwork to you on time, maybe they missed their first check, and you double up the second check. In that instance, you would put all of the money for both checks into the base field and use the mid-year hire code. Again, just a quick comment. So-and-so, missed their first check, we doubled them up on the second check. Pretty easy. The payout code is the next one. This is when somebody is paid out the balance of their contract for days worked prior to going on an unpaid leave. We are expecting to see an LOA form sent to us. We are expecting to see an event in the system. This is used when they're on a leave, they're expected to return. This is not what you use when somebody is leaving. If they have resigned or if they have been let go, you use the termination code. When they are being paid out before they go on an unpaid leave, you use the payout code. The next two also have to do with leaves. Prorated paid leave code is when somebody's pay has been prorated due to unpaid leave days. So they're on an approved leave. Say somebody is out for 60 days, but they only have 40 sick days to use. If you allow them to stay on payroll and you're prorating their pay down to cover those 20 unpaid days, you would use the prorated paid leave code. So whether you do it only while they're out, some schools do it before they go on leave, also while they're on leave, and then also when they come back. So if they are physically out, not working, or have already been preemptively prorated down, you would use the prorated paid leave. You would also use it for a partially paid sabbatical if you offer that. If you're agreeing to pay somebody 50% for a partially paid sabbatical, you would also use prorated paid leave here. Again, an LOA form is required to be sent to us, and we would be looking for LOA events in the system. The next code is the return from leave code. This is if they have returned from their leave already and they are being prorated still due to that leave. Maybe it's just their first check back from leave. Maybe it's for the rest of the year. However you do it, if their pay is recalculated after coming back from a leave, you would use the return from leave code. Again, LOA form, we should already have it from when they went out on leave, and we would be looking at the member events as well. And that is the end of the first section. So we're going to take a quick 15-minute break and we will reconvene at 11:30 and we will walk through an actual deduction report from start to finish. Thank you. Okay, welcome back. I did want to just mention at the end of the last section, you may have noticed at the very end of that last section when I was showing you how to sort by pay date, that it was not actually sorting by pay date, and that when I was adding the record from scratch, you were seeing some drop-down lists that weren't populated. That was because I had directly before that copied a record and forgot to click apply before I went to the next button. So it was not functioning properly. You will see as we go through this next section that all of those features are actually working appropriately. So we will jump into that. But I just wanted to mention that in case you did notice some weird things during those last two sections there. All right, so we're going to start from scratch. So we're going to go to import history. And you go to upload file. And then you just browse. So you're looking for the file that you've exported from the system, from your payroll system. The description can be literally anything you want. We usually recommend something to do with your districts, your district number or name, and then the month and year that you're working on. But it can be literally whatever you want. It's a free-form text file or field. The reporting period is the 2-digit month, 4-digit year always. Click next. When we get here, you're just going to click confirm. And you'll see the file is listed here as ready and not processed. So we click on the ID hyperlink. Now we are on the import page, and there is also a validate button here. You do not ever need to use the validate button on the import page. It is actually just a waste of time. It's just part of the product, so we can't unfortunately hide it, but you do not need to do it. When you click process, it goes through the validation process and does the whole process for you. So you really only need to click the process button when you get to this page. So you click process and you wait, you'll see that this flag has changed to queued processing request. So it's in the queue behind whatever other reports might be in there. It will eventually change. This is a smaller report, so it shouldn't take too long to process. But it is going through a lot of validation. So if you have a larger report, it can take up to, 5 minutes. If it's really big, possibly even 10 minutes. It's hard to say. If you have other things to work on, you can do that. You can go to deduction reports if you need to do anything with your calendar. Once it's done, you'll actually get a little green pop-up regardless of what screen you're on. So you can do that. If it does seem like it's taking kind of an extraordinary amount of time, it can always help to hit F5. It will refresh the screen for you. Sometimes it's just that the screen itself has not refreshed, but the file has officially been processed. So if it's taking an extraordinary amount of time, you think it should definitely be done by now, just hit the F5 button and see if that updates it for you. And we will just wait. We will be patient. Make sure that it's done. So it's still queued for processing. Okay. I was just notified that some questions have come in during the break. So while this is processing, I'll try and answer some of those now.
All right, first question is, if CBA is just ratified, do we use SC for the remainder of the year? Retro pay for 18 pays has just been paid, and the balance of retro will be paid over the remaining pays. Do we need codes for this?
Okay, so I understand the question, and it kind of depends on how you did it. So there were a couple of different data points in that question. If you paid a one-time retro for the whole year, you would code that as retro pay, and it would go on the retro field. In most cases, if it's handled that way, you would not necessarily need a service correction code if you just automatically put them at what the normal biweekly would be for the new salary. If you do it as a partial one-time payment and then spread the rest of the retro payment out over the remaining pays, which it sounds just like maybe is what's happening there based on the second part of that question, you would need to use the salary change mid-period. So if you're spreading the retro out and prorating the biweekly due to the late contract ratification, you would have to most likely use the service correction code for the rest of the year. Any other? Yeah.
Yes. A teacher is on leave for 60 days, of which 20 will be unpaid. Her pay will be prorated and she will not miss a check. I was told the LOA form is needed, but I was told an event entry is not necessary since she is not missing a check. Is this correct?
It is not correct. Well, it's partially correct. We do need the LOA form and we would need an LOA event. So we would just enter a different type of event in the system. And if you're not sure how to do that, there is a video on how to enter that type of event into the events page, but your rep can also help you. Sometimes they will even enter it for you and we get the form in. So it is not correct that you don't need an event. You definitely do. We need a record that they were on an approved leave. So we would need both of those. Excellent. Okay, so was that it? Was there?
There's one more.
Okay, we'll take it.
Does the unpaid admin leave affect their 1 through 26 years of service? 26?
Yeah, so using that code in general it does not prorate their service, but we have to make sure you're using that code appropriately. If they are on an approved leave for an extended period of time, you would not use that code. It's really just for, if they're docked a few hours here and there or a day or two, they've worked, 182 out of 185. They had 3 days unpaid randomly because they ran out of sick time. In most cases, you would use unpaid admin leave and they would most likely still get the full year of service. It really is dependent on the situation, which is why I can't give you a definitive answer. But in most cases, if it's really just a day or two docked, they would still get the full year of service. But again, it is on a per case basis. We need to know all of the facts. Okay, that's the end of the questions for right now. So it's finished processing. It was processed with errors. You can see here that 36 rows out of 38 were imported. So 2 of the rows had a problem. Now we need to figure out who that is and what the problem is. It's only 2 records, so I'll probably use the PDF version of the file detail error report. If it were a longer list, you may want to consider using the CSV version, which opens in Excel. Sometimes if it's a really long list, it's just a little easier to manage. But we only have 2, so we're going to go PDF. Click it. This screen, I do need to pre-warn you, it does have a little glitch. It is being worked on, but you come to the screen, you click done. At this moment in time, you're going to get this random error at the top. Just click done again and it will go through. This will list each person for each record, what the problem is and what the error is. So Amanda Apple, she has 2 entries here because it is incorrect on both records because it's per pay date. So she has 2 records in June and both of them have an invalid position code. Okay, that's easy. We can go fix that. Now you want to keep in mind, if it's incorrect here, it is incorrect in your payroll system. So first order of business is fix it at the source in your payroll system. So you don't have to keep fixing it on the import screen. It's 2 records. I'm going to fix it in payroll and then I'm going to fix it here on the import screen and then just reprocess it. If you have a much longer list than 2 records, 10 records, 50 records, 100, however many you may have, it may be more beneficial use of your time to fix it in payroll because you have to fix it in payroll no matter what. And then just rerun the file and don't use the one that you have here. Mine is only 2 records, so I'm going to use it. I'm going to fix it in payroll, but fix it here. So the position code is all the way to the right. Librar is not a valid position code that we accept. She's obviously a librarian. It probably actually says the full word librarian in the payroll system. You want to fix that. It should just be Libra. We're just going to actually fix it right here and we're going to hit save. It was an easy fix. You're going to change it to Libra in your payroll system so that when you run July, she's not going to give you an error. And we just click process again. And it's now going to try reprocessing that file with the correct position code. So it should not fail this time. Any questions since that point? Nope. Excellent. We'll just have to be patient and wait for it to finish processing. Sometimes I like to just click over here to distract the page, refresh it again. You can always hit the F5. And then you get this message here. It is done. You can see that the process flag has changed to completed and processed successfully. That means it's now on the deduction report page, ready to be worked on. You can see it here. Here's the May report that we were going through in the first section. Here's the new June report. We're going to click on the transaction ID. We're going to actually work on the June report for the presentation. Again, we're on the summary page. Always, 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 we're going to click validate before we open it. It's going through all your member events, going through your calendars, checking to make sure that's all updated. Now we're going to click edit details to open it. Just wait for the screen to load and then click export exception report so you know who to work on. It's right there. Format it however you need to format it so that you can read it, print it, whatever you need to do. And we're just going to go, typically you would just go person by person down this list. so that you don't skip anything. For the point of this presentation, we're going to just discuss the most common errors and exceptions and how to fix them. So the most common error you're going to see is a base to salary error. So I'm going to filter for the first person, and we'll look at some examples. It is the most common error that you will see in the report. So we're going to look at 5 or 6 examples of the same error, but they have the error for different reasons. So I'm going to first filter for Amanda Apple, and then I'll show you, since I can't have both the exception report and this on the screen, I'm just going to click on this caution sign here. It will tell you what the error message is. So this is the error that she has. You'll hear ESU staff refer to it as a base to salary error, just kind of colloquially. It's a very long error message. Base earnings do not match salary based on the FTE and pay frequency reported. Please ensure those fields are correct. If they are, please use a service correction code. So this is not saying to use the actual SC code, which is salary change. It's the service correction code is what this message is saying. The important part is when you see these messages to actually read them and kind of understand what it's saying. So it's saying here the base earnings is not what we expect it to be based on the annual salary you've told us, the FTE you've told us, and the pay frequency that you've reported here. That's what it's saying. That's why the error is being generated. And then it's asking you to check those 3 fields and make sure they're correct. If they're not, you're going to fix them. If they are correct, then you use the service correction code to explain why the base pay is either higher or lower than we're expecting it to be. So let's see what's going on with Amanda Apple. I'm going to scroll over to the right so we can see all of the data points that we need to check. So base to salary error, you're always going to check FTE, make sure it's accurate for the month that you're in. So this is June. Question is Amanda Apple 80%? Was she working 80% in June? You check your records. She is. Perfect. FTE is correct. Done. Salary is $62,982, the full contract, full year annual salary. Let's check her records. What step and scale is she? She is a master's 4. I'm going to check the contract. A master's 4 annual salary is $78,727. So her salary is wrong. Here it's showing her annual salary is $62,982. My guess is that is the prorated salary. That's the 80% of the full salary. The report here always needs to have the full-time, full year salary. So whatever somebody is, so if she's a master's 4, whatever it says in the contract, it doesn't matter that she's part-time. It doesn't matter if she started the first day of school, the 10th day of school, the last day of school. Whatever's in the contract is what you put here. So it's 78727, 78727. Again, this data came out of your payroll system. So if you have the chance, fix the annual reported salary in your payroll system so you don't have to keep fixing it every month in this report. Then check the pay frequency. Is she 26 checks? She is. Perfect. Now all 3 data points are correct. We're going to hit apply and see if that makes her errors go away. Let's check. And just a caveat to that statement, the point of the report isn't to make your errors go away. It's to make sure that the information contained in the report is accurate for what happened in June. Sometimes that will take the error away when you fix it. Other times it will not. You'll have to use the service correction code. So her salary was wrong. That's what caused the error. We fixed it. We put the correct salary in, and now she no longer has any errors. Amy Appleton is next. She has the same error, but for a different reason. So let's check hers. Filter for Appleton. So you'll see she only has the caution sign on 1 record. Her top record is totally fine. It's the base to salary record error again. This example right here is actually why we tell you to go through the report person by person, because you can see that on 612, it's perfect. Record's perfect. There's no errors, but on 625, there is. So if we scroll over to see the relevant fields, again, you're still always going to want to check FTE, make sure it's correct. Is she full-time? Yes, that's accurate. Is $62,982 the correct salary? Check, she's on an individual contract. That's accurate. Is she on a 26 pay frequency? Yes. So the 3 data points are correct. So then why is this check different than this check, right? And you can see the correct one on top. So you can tell instantly that the bottom one is lower than expected. So the question is why? So you go to HR, you ask, you look in your payroll notes, you see that Amy had to take a day off without pay. She didn't have any time to use, but she needed a day off. In that case, we're going to use so we've checked the data points, FTE, annual salary, and contract term are all accurate. Nothing to do there. We're going to use a service correction code to explain why this check is less. It was just 1 day pay without pay. She's not on a leave. So we're going to use the unpaid admin leave code. When you use this code, please just add a quick comment. We don't need a dissertation. We don't need to know specifically necessarily why she was out, just that she was docked a day on that check. So the comments are generic to the report. So you do always need to start your comment with the member's name. Even if you're filtered on somebody, your comment is in no way connected to them. So you do need to start with their name. Something as simple as docked 1 day's pay on 6/25/26. If it's 3 hours, say 3 hours, 3 days, whatever the case may be, this is sufficient. You're telling me what check it was docked and how much time was docked, and then we'll post. And then we'll close our comments and then hit apply to save the unpaid admin leave code. If you're newer to the system, I would recommend after you make a change on one person, hitting apply before you go to the second person. If you're a little more comfortable and you have good internet at work, you can probably fix 2 or 3 people, then click apply. But I would definitely recommend newer people clicking apply after each person, just so you don't lose any of your information as you go through. Our next person is algebra. I'm going to search by his last name. Again, he's somebody that has a basis salary error. It's a very common error that you will see. He has it on both records. So we're going to scroll over again. We're going to check the same fields that we always check when we see this message. Is he working full-time? He is. Excellent. FTE is accurate. Is 70,207 the correct step and scale salary for him? He's master's 8. Check the contract. Perfect. Correct salary. Is he on the 26 pay frequency? Yes. Perfect. Okay. So the 3 main data points that contribute to this error are accurate. So then why is the base higher or lower than expected? So somebody that is an annual salary of 70,207, working full-time and 26 checks, we would expect their biweekly pay to be $2,727. It is definitely not. It is less than that. This person is a lump sum, which is why their second check is so high. Why is the base pay lower than expected? You're going to do your research. You'll find out that he actually started the year late. He missed the first week and a half of school. So he's been prorated accordingly. So we're not going to touch the data points, the 3, FTE, salary, and pay frequency. Those are accurate. We're going to use a service correction code to explain why the base is different than expected. You click on the list. He started the year late. Mid-year hire is the code that you would use on both records. And then we would hit apply. Since he is actually a mid-year hire and you're saying mid-year hire in the code, we see that. We're going to check his member events. We'll see he clearly started the year late. We don't necessarily have to have a comment in that particular situation. You're using the code as it was designed originally. He is a mid-year hire. If you prorate for the whole year, you will need to use mid-year hire for the whole year. They start just a few days late, you only prorate 1 or 2 checks, you'll only have to use the code on 1 or 2 checks. And then the rest of the year, you should be fine. You'll see that he still has some caution signs. If you click on it, it's now an exception. So it's saying, yes, the base isn't what we expected it to be, but you used a code. Thank you for using a code to explain it. So then you can continue on to the next person. Our next person is Bernard Boss. Filter for him. Again, you're seeing it's a little bit faster when you just replace one name with the other in the filter instead of removing it and starting over. Bernard Boss only has an error on one record. We're going to click on that. He actually has two errors. One of them is the base to salary error. That's the one we're actually looking at. And then he also has a full-time percentage does not match. So we'll take a look at that as well. We're going to scroll over. We know that the error is on the second record. So we want to check again the 3 data points. FTE on this one is different. This is the one that has the actual problem. Is 80% correct? You know, this is somewhat unusual. We would see 100% on one record and then 80% on another record, but it's definitely possible. Is 80% accurate for his June 25th check? Did he change his pay frequency in the middle of June? You're going to check your records. You're going to see that he actually did. He changed from full-time to 80%, and it's effective on this paycheck here. Perfect. Is his annual salary $120,000? Is your superintendent? He has an individual contract. It is still $120,000. That did not change. And his pay frequency is still 26. That did not change. So his FTE changed in the middle of the month, and you prorated his pay accordingly. So we're going to need a code to explain why his base is lower than we would normally expect. So it's a change in pay frequency, or a change in FTE, I'm sorry. Change in FTE, and his pay has been prorated as a result. This is an off-label brand of off-label use of the mid-year hire code. The mid-year hire code will give him the appropriate service. We just don't have a change in FTE code. So we're going to use mid-year hire. It's also a change in the middle of the month. So we're also going to use the OK verified on the FTE code. That is saying, I realize 80% is different than it was before, but it is accurate. We're going to add a quick comment because it is an off-brand use of mid-year hire. He's not actually a mid-year hire. So we're just going to put in a comment explaining why we use that code. And it just give the facts. It should be brief, but give us enough information so that we don't have to reach out to you asking you what your comment means or what happened. Did he really go to 80%? So Bernard Boss changed FTE from full-time to 80%, effective June 1st, 26. First prorated check is June 25th, 26. There we go. We have everything we need. What the change is, what it was, what it went to, the work day that the change took effect, and then the pay date when the change took effect. We're going to post it. Then again, don't forget to hit apply. You can hit apply, then add your comments. It doesn't really matter what order. Just come up with a rhythm that works for you so you don't forget a step. Another one is Irene Good. We're going to filter for Irene and apply. She also has a base to salary error. It's on both of them. So we're going to check the 3 data points again. FTE, is she full-time? Yes, she is full-time. Is 82,075 her correct salary for June? Yes, she's CAGS 2. That's perfect. And is she 26 checks? Yes, she's on the 26 pay frequency. So again, the 3 data points are accurate. So then why is the base different than we are expecting? Typically, when somebody is at 82,075, they would have a biweekly of $3,045.77. And that is not what she is being paid. You can also see she has some retro here. So something's clearly going on, possibly a salary change. You check your records and you see, yep, we had been paying Irene Good as a master's 30 step 2 all year, which is $79,190. She notified us of the error that she actually had some continuing education credits, and she actually should be a CAGS 2, which is this 82,075. It was not brought to our attention until June, so we paid her retro back to September 1st, because she should have had this new rate effective at the beginning of the year, and we prorated her base accordingly, just for the June checks, June, July, and August checks. So for the rest of the year. So the 3 data points are accurate. So we're going to use a code to explain why the base is actually higher than expected. we would use the salary change mid-period code here. Because she literally had a salary change late in the year, retroactive back. She has retro pay, so we do need to include what that retro pay is for when we add a comment. So we're just going to do a quick comment. Change from Masters 30, step 2, 79,190 to CAGS 2, which is 82,075. Effective retro back to 9/1/2025. Retro paid on 6/12/26. Bi-weekly prorated for rest of the year. You can see all my spelling errors. Luckily, the system calls them out so you can fix them. So this is a good comment. It's brief, but it tells us everything we need to know. What step and scale she went from to, when it was retroactive, what the retro pay is for, when it was paid, and that her bi-weekly has been prorated for the rest of the year. Maybe it's just one check, whatever the case may be. You just list that there and post your comment. And then we click apply to save the service correction code. We have one more example that has the same error, then we'll move on to another error. I know this seems probably a little repetitive, but it is a very common error. And so far, everybody has it for a different reason. So we're going to go to one more. And this is Danny Desk. Click apply. Let's see what we got for him. He has it on both records. We're going to scroll over and look at the data points in question again. Is he full-time? Yes. That's correct. Is 81,628 the correct salary? Yes, he is the director of nursing, that he has an individual contract. That is what the salary is. And he is on the 26 pay frequency. So all three data points are perfect. Why are we seeing this error then? Somebody with this annual salary working full-time, getting 26 checks, we would expect the biweekly to be $3,139.54. It is definitely less than that. He's getting $24.89.64 on each check. So why? Why is his pay being docked strategically like this? You're going to check your records. You're going to see that he was on a leave earlier in the year. Or I'm sorry, he's currently on a leave. So he had a 70-day leave. He only had 46 days to use. So 30 of those days are going to be unpaid. He works at a school where they agreed to just lower his pay, keep him on payroll the whole time, but they're going to prorate him down to keep him covered while he's out. He is still currently out. So we will use a code to explain why his base is lower. He's currently out and his pay has been prorated. So we're going to use prorated paid leave. Again, we are looking for the leave of absence form and a leave event in the system. If you're not sure how to do the leave event, ask your rep. They can help you. They may help you enter it. There are videos online that walk you through all the different leave events so that you can check those out. And you would click apply. As long as we have your leave form and there is an event, you don't necessarily need to have a comment in there. Code is telling us they are on a prorated paid leave. And then we're going to check those other data points. Are there any questions on that particular error? Nope, no questions. Okay, so we're going to move to another error. The next error we're going to look at is the full-time percentage does not match the current percentage on the member record in our system. So let's check that record out. So that is Paul Pencil. Spell pencil correctly. There we go. Just wait for it to filter. So I actually have two people with the last name of Pencil. I want to actually narrow it down for myself. I like to only just see the person I'm working on. I'm just going to go add another few letters to this so I only see the one I need. I only want to see Paul Pencil. So I've made the filter a little more succinct. Okay, so he has FTE being reported is not what we have before. So you'll see here, full-time percentage does not match the current FTE on the member record in our system. Note, either correct the value or certify this change is correct by choosing FTE correction code. So you'll notice this is really telling you what to look at, what data point we think is possibly incorrect, and what to do. If it's incorrect, fix it. If it's not, use the FTE correction code. So let's check it out. And you'll also notice, sorry, before I get back, you'll also notice he has a base to salary error. If his FTE in fact is wrong, that will also generate a base to salary error. Remember, that's one of the 3 points we were just checking on those 6 people we just looked at. So let's check out his FTE. It's all the way to the right, so we're going to scroll over. He is listed as full-time. Is he actually full-time? In June, was he working full-time? You're going to look at your records. He is actually not full-time. He is 50%. He was only part-time in June. So we're going to enter 50. That is the accurate FTE for June. So we're going to click apply and see if that takes care of all the problems. Just wait for it to save real quick. Scoot over. He no longer has any errors or exceptions. So it was just his FTE. It was incorrect. I fixed it to be the correct one. Again, it was incorrect here, which means it came out of your payroll system incorrectly. You would want to go to payroll and fix it in your payroll system. You really only want to, the caveat to that is if you are a little bit behind in your reporting, you're working on possibly a different school year, you would not want to change it to 50% unless they are still 50% this year. So if you're updating payroll, make sure you're updating it to the current situation. That's just the one caveat. So if you are a little bit behind, you don't want to change it in payroll for a prior school year. Another error message that we're going to look at, there's 2, they actually kind of go together. So I'm going to pull up Brendan Busser and I will show you these 2 errors. So he has 3 errors, but the 2 that we're looking at here are the bottom 2. So this error, the pay frequency reported, does not exist on your payroll calendar. Please either correct the pay frequency or update your payroll calendar. So it's saying, hey, whatever pay frequency you have listed here, either it's incorrect because there is no payroll calendar for it, or you need to fix the date on your calendar. Then the next one, they kind of go hand in hand. This one says pay date cannot be found on your district payroll calendar for this pay frequency. So if the pay frequency is incorrect and there is no payroll calendar then associated to that incorrect pay frequency, there's also not going to be any pay dates. You can't have a pay date on a non-existent payroll calendar. So if you see both of these together, let's check the pay frequency first. We're going to scroll over. Pay frequency is all the way to the right. So Brendan Busser's pay frequency says 27. Is he actually on a 27 pay frequency during the 25-26 school year? You're going to check your records and say, actually, he's not. He was on 27 pays last school year. We just missed updating it in payroll. So we're just going to change it here to the accurate pay frequency. Again, fix it in payroll if you're still in the current school year. Click apply. We'll see if that takes care of his error messages about the pay dates. Okay, it's done saving. He actually no longer has errors. So that one data point being incorrect generated 3 errors per record. So it's 6 errors created by one field being incorrect. So it's probably an entire page of your exception report. So that's why it's important when you see stuff like that being incorrect to fix it in payroll so you're not updating them every single month in the deduction report here. Since the pay frequency was incorrect, that was also generating the base to salary error that you saw, in addition to those 2 payroll pay calendar issues. The next error, the last error we're going to look at is pay duration and pay frequency are not a valid combination. That's Hank History that has that. So it says here, pay duration and pay frequency are not a valid combination. So obviously we're going to go look at what the pay frequency and pay duration are. They are all the way to the right. They are in this section right here. Okay. So the three of these kind of go hand in hand. So for your school year employees, your teachers, your guidance counselors, social workers, nurses, psychologists, what have you, people that are working a school year, the September to June calendar, their contract term is 10. They're contracted to work just the school year. Their pay frequency, his pay frequency here is 26. So he's on the 26 pay frequency. His pay duration says 10. So if he's being paid 26 checks, he cannot be paid over 10 months. Somebody is 26 pay frequency, their pay duration has to be either 12 if they're going to be paid over the summer, or LS for lump sum. Those are the only two options with 26. Same for 27. They should be pay duration of 12 or lump sum. 52, same situation. So we're going to change it. Let's see if this person is getting a lump sum. I believe they are. Let me just double check though. Yes, they did get a lump sum. I'm going to change this to lump sum and hit apply. I would recommend as soon as you know, so if you make your teachers choose at the beginning of the year whether they're going to get a lump sum or maybe later in the year, as soon as you know somebody is going to be receiving a lump sum, update the pay duration in your payroll system. They should really be reported as LS all school year, so that when you get to the June report and the lump sum payment is in there, it's expecting it. It knows how to read the report correctly. It knows that it's going to be for multiple checks. So we're going to hit apply here. If you offer 21 pays, 22 pays, 42 pays for staff that are paid, again, just during the school year, you would have the contract term would still be 10 because they're school year employees. Pay frequency would be 21 or 22, 42, whatever you may offer. And then the pay duration is 10. So they're receiving checks only while they're physically working, and they are receiving less checks, but for more money. So they're having their entire salary divided by 21 checks instead of 26, or 42 instead of 52. That is the last error message we're going to look at. Are there any questions before we move on to the exception messages? Nope, no questions. All right, we're going to just keep on cruising then. The next exception message is one you'll probably see a lot. I'm going to remove this filter since we're not going by name at this point for this one. You can actually, for this particular one, you can actually filter by the message. So it's the exception message of member not enrolled. Right here, you'll see it listed there. We're going to click apply. I'm sure all of you see at least somebody on your report every single month over and over again that member has not enrolled. So that is a true fact that they have not enrolled as of the moment you clicked that validate button before you open this report. So for me now, that's been 45 minutes. As of 45 minutes ago, these three people listed here had not enrolled. So if you email them while you're working on this report and say, can you please do your online enrollment? And they say, I've already done it. As of the moment you clicked validate, they had not done it. So unless they had just done it in the last 5 minutes or 45 minutes in my case, that is not accurate. There is nothing to do in this report for these people, but you do want to just remind them they need to complete the online enrollment. They are actually supposed to do it within 30 days of being hired. So if they still are showing up month to month, please poke them again and remind them that they need to complete it. But again, nothing to do for that in the report itself. The next one is probably your most common exception that you will see other than member not enrolled, and it's a potential rate error. So let's take a look at somebody that has this. Chris Calculus has this. We're going to look at a few different examples. So, and then I'll show you what the error message actually says. Basically, the overall gist is that it will say potential rate error, MyTRS rate, something, school rate, something else. So let's take a look. We're just going to click on here. So when you see this message, so they actually have two. They kind of go hand in hand here. So look at them kind of as a group. When you see this message, You want to make sure you're reading them, of course. But what you really want to pay attention to on your side is what the school rate is. If the school rate listed here is a valid MTRS deduction rate, you can actually skip this message. But you need to read the message, obviously, to know if you can skip it. What are the valid MTRS deduction rates, you ask? So the only rates that we have are 5%, 7%, 7 plus 2, 8 plus 2, 9 plus 2, or 11. So obviously, if it's a plus 2, the school rate will only show 8, 9. The 2% aspect of it is up here. But if the school rate listed here is 5, 7, 8, 9, or 11, you can skip it. 1099 is a rounding error. This is actually 11. You can skip that as well. Any decimal of 0.99 can be skipped. So 8.99, 7.99, those are just rounding. Any other decimal you cannot skip. So if it said 10.98, we would have to actually look at that record. What's going on here is that we simply disagree about what the rate is for this member. You think they're 11%, we think they're 9 plus 2. The fact that we think they're 9 plus 2 is also why you're seeing this potential 2% rate error. We think they're 9 plus 2, so we're expecting 2% of 232.58. You sent 2% because you're taking 11. And there's no such thing as 11 plus 2. So you can skip it. These people are on a list of people that are being researched by our transfer, refund, and enrollment department. It does take a lot of time. Please do not change anybody's deduction rate based on a message you see like this. The only time you change somebody's deduction rate is if somebody at MTRS has specifically emailed you and asked you to change it. It is possible that we have information you don't have that impacts the rate. It's possible you have information that we don't have. So we're doing a bunch of research, and we will email you if you have the incorrect rate. If you have the correct rate and we have the wrong rate, we'll update our system and this error message will go away. But again, please do not change anybody's deduction rate based on this message. We'd only change somebody's rate if somebody at MTRS has specifically asked you to change it. Okay, so 11% is a valid rate. We're going to skip this person's message. There's nothing to do there. We already know about them. The next person we're going to look at is Randy Ruler. See what his are. Also, to avoid the scenario that we just were seeing there with Chris Calculus, to avoid as many of those cases as possible, I'm going to go back and say again, it is very important when you register somebody, the last step of the registration process is to check their deduction rate on the roster page. And I will show you that in just a few minutes where that rate is kept. It's also in the registration instructions. It's in the registration video. It's very important when you register somebody, go to the roster immediately, check the rate so that you're setting them up from the get-go with the correct deduction rate. So let's see what Randy Ruler's issue is. So it says potential rate error, MTRS rate 11, school rate 11.04. Okay, well, that's not an option. We don't have anything over 11. We don't have any decimals that aren't zeros or 0.99. So we need to look at this record. So it's saying that you've taken too much based on the earnings that you've reported. So let's take a look. When you see that type of message, you want to check the actual earnings. Are all of the earnings this person was paid represented in this report? Are they in the correct fields? So let's check. You're going to open payroll. You're going to check his 625 record. Is this correct base? 990130. Yes, excellent. Does he have any coaching pay? No. No retro pay, no longevity. Any eligible stipends? No. Premium pay? No. Okay, so he does have ineligible pay. You can see in payroll, he was paid hourly tutoring for $43.75. Hourly tutoring is not eligible since it's extra hourly pay. It is in the correct field, so it's in the ineligible field. It is an ineligible payment, so that's where it belongs, but it does appear that deductions were accidentally taken on it. The deduction should have been just on the base, and that deduction would have been $1,089.75. $2.14. It's obviously higher than that. You definitely took deductions in error on this ineligible pay. So this is the month the error occurred. That's fine. You do not change the deduction to make it look like you didn't take it. This is all in the past. So this needs to represent what actually happened on June 25th. And on June 25th, I paid somebody hourly pay and accidentally took deductions. No problem. The money is in the correct field. Everything else is in the correct field. The deduction is accurate. We're just going to go up to the comments and add a comment saying what happened, what you're going to do to fix it, and when you're going to fix it. So the action that needs to take place is that he needs to be refunded. How much? He needs to be refunded $481. Why? For deductions taken on ineligible extra hourly pay. When? On 6/25/26. When are you going to refund this deduction to him? He actually got a lump sum here, so you're not paying him again until September. So just say, will refund in September. There you go. It's brief, but it tells us everything we need to know. We needed to know that he needs to be refunded, how much, why, what pay date the error occurred, and when you're going to actually refund him. So that is a sufficient comment. And we're going to post it. Again, nothing needs to be done with the record. The money is in the correct field. I'm going to look at one more person that has a similar issue, slightly different, and that is Sandra Statistics. See what hers says. Okay, so she has the caution sign just on the one record. Let's click on it. MTRS rate 11, school rate 4.22. Obviously not an option. We don't have anything below 5. So let's take a look. It says you did not take enough based on the eligible earnings you reported. So let's scroll over and look at the earnings. So it says there is a base of 2809.64. Is that correct? You would look in payroll, make sure all of the earnings are accounted for and in the right field. Yes, that's the correct base. Seeing $4,500 in coaching. Is that actually athletic coaching? Yes, it is. She is the track coach. That's a spring sport. So she's getting $4,500 for that. Any other earnings missing? Added in. But no, this is all she was paid. She was paid her normal base pay plus $4,500 in coaching. If that were the case, she has over $7,000 then of eligible earnings that should have had deductions taken. So it's a total of $73,09.64 in eligible earnings. 11% of that, her deduction should have been $804.06, but it's $309.06. So clearly, you missed the deduction on the coaching pay. So we're going to leave the money here because it is coaching. We're not going to change the deduction. This is what happened. We're just going to add a comment. Sandra Statistics. Wish I hadn't used this name. I always spell it wrong. It will fix it for me. Nope. What's the action that needs to happen? We need to collect. How much? She owes $495. Why? For missed deductions on track coach pay. On what pay date? That was on her 6/12 check. When will you collect it? She also got a lump sum. She'll have to collect it in September. If she's not coming back to your school here, you would add a comment saying, can MTRS please bill? She's no longer employed at Gotham Public Schools. So again, it's giving us all of the relevant information without being too wordy. Collect how much, why, what check date had the error, and what you're going to do to fix it. And we're going to post it. Obviously, you also want to fix your pay codes in payroll. You don't want to keep making deduction corrections, but don't actually fix the problem. So if you have a coaching pay code that does not have deductions coming out, you need to fix the pay code so deductions come out. In the prior example where you were accidentally taking deductions on extra hourly pay, you want to fix the pay code so that you don't keep taking those deductions. Otherwise, you're taking deductions, refunding them, taking them, refunding. It's just this endless cycle. Fix the problem at its source and then do your refunds and collections as needed. Okay, the next exception we're going to look at is 2% deduction taken in error. We're going to look at Brenda Botany. See what her message says. Scroll over. So it says 2% deduction taken in error. You'll notice it's just one exception message. She does not also then have the exception message, MyTRS rate one thing, school rate another. It's strictly 2% deduction taken in error. That means that we agree 2% deductions should not have been taken. So she's 11% most likely, and you're probably taking 11 plus 2 in error. So you're going to just, of course, check, make sure everything looks good, that all of the earnings are in the correct bucket. And you can see here you are taking, this is 11% plus an additional 2% in error. So again, fix the problem at the source. Go to Brenda Botany and payroll and make sure that the 2% deduction stops. Stop it, stop the bleeding, and then we're going to go in here and just add a comment. Again, just give the basic facts. Hopefully you're a better speller than I am. Needs to be refunded. Why? For 2% deductions taken in error. Correct rate is flat 11%. And then it's per, she has 2 different pay dates here. So 6/12/26. She needs to be refunded 47/54. Same for June 25th. And then we'll refund. This person is going to be paid over the summer. You'll refund it in July. And then just post the comment. If it goes on for multiple months, say this has been an ongoing problem, you're a month or 2 behind in reporting, so it's gone on for 3 months before you caught it. Again, fix the problem at the source, stop the problem, stop taking the 2% deduction, and then you can issue the refund for all 3 months in one transaction instead of doing it piecemeal, doing each, one for one. So fix the problem and then do one global refund for them. The last exception message we're going to look at is combination of member name and SSN does not match. So let's take a look here. See who has that comment. Oh, I still had the botany filter on as well. So now it's saying, show me Brenda Botany that has this exact error, which she does not. So I'm going to remove botany. Okay, so Beth Chemistry has this error message. Let's take a look. It's this message right here. Combination of member name and SSN does not match the data in our system. So this message is generated when the last name in the name field does not match the last name in the reported last name field. This data comes from our database based on the Social Security number here. So if this is the first report that this person is in, that means that the name does not match the name you registered this person under. If they've worked there for a couple of months or years, it means that it does not match the last name that was in the prior report that was posted. So again, name comes from our database, reported last name, first name, middle, and suffix come from your payroll system. So when somebody has a name change, if they're getting married, divorced, or just legally changing their name for any reason, they come to you, you fix it in payroll, and it gets passed to us via the monthly deduction reports. We cannot just change it in our database because it will then be overwritten by your next deduction report. So it always has to be changed with you in payroll for any current members. Same for the address. We get your addresses from the import file. As soon as your import file says processed successfully, it has updated the member's event, address in our database. Same thing, we cannot have a member call us and we can change it. It's just going to be overwritten by your next import file. So make sure they're being updated in payroll accordingly and it gets passed to us that way. So when you see this name error message, basically you just want to make sure that these are the same person. Did Beth Chemistry become Beth Biology? If so, move on. There's nothing else to do. Just make sure it's the same person and that the information in the reported last name, first name, middle name, and suffix is accurate. If it is, when we release this report, it will overwrite our database showing her new name. So just make sure it's the same person. If a very unlikely scenario, it's not the same person, you would need to contact us, and we will need to figure out what's going on with the social security number in the database. Are there any questions on the exception messages? No questions. All right, so we're going to move on to the missing members section of the exception report. Is at the very bottom. People sometimes skip this section and you definitely don't want to skip it. I'm going to just run the exception report again, just so you can see where it's located. It is important to not skip this section. So right down here, it says missing members. So there's two missing members. There's gymnasium, he's missing on 2 pay dates, and there's detention, who is missing on just the June 25th check. So they show up as missing because they have been registered as active employees at your school district. You have indicated through the registration process and the events that they should be in this report. They should have been paid on these pay dates mentioned and should have had MTRS deductions taken. That's what the system is expecting. They are, however, not in the report. So the question becomes why? Why is gymnasium not in this report for 2 pay dates? So you're going to look at your records and figure out, all right, you're going to go to payroll. Was he actually paid in June at all? You're going to go there. You're going to see Jim actually was not paid in June because he left in May. He resigned in May. So he was not paid, no MTRS deductions. He should not show up as a missing person. He's showing up because you forgot to terminate him in MyTRS. So we're going to go do that now. We're going to click save. So we're closing this report. We're going to go to the employee roster. We're going to filter for gymnasium. If you have their social security number, member number, part of their name, whatever you want to search by, you can. Using the filter, click apply, click on the masked SSN to get to the data. We're going to update his event information. But before we do that, I just want to show you, this is where you go after you register somebody. As soon as you're done registering somebody, you go to the roster, you look the member up, and you check their rate. It's right here. Jim is at 11%. So you know right away from his first check, you're going to set him up in your payroll system with the 11% deduction. And we won't hopefully see any of those exception messages about his rate. So that's where you find that. But we're really here to terminate him. So we're going to go under the event information section, click edit. The stop date on the contributing event is the person's last day physically working. Or if they're on a leave and they're terminating, they're not coming back, it's the last day of their leave. If somebody works the entire school year, you can use June 30th as a generic, they finished the year date. He left in the before the year was over. The 15th was his last day. May 15th, so we're going to click on the calendar. May 15th was his last day. Click add event. He resigned, so we're going to choose termination voluntary. The event start date is always the very next day. So this is a Friday. It doesn't matter that this is going to be a Saturday. It's always the very next day. So I'm going to say May 16th. The effective pay date. This is the most important date on this screen for a termination event. The effective pay date is the day after their final check. It is not the day of their final check. If you use the day of their final check, you're going to create errors in your reports. It's going to be a pain in the neck to undo. You're going to have to contact us. We're going to have to fix things for you. So if you remember nothing else from this, it is always the day after their last check when you're doing a termination event. So his last check, I'm going to go to the calendar, was actually on the 21st. So I'm going to choose the 22nd. It's the day after. And then we hit save. And that applies. So if you have somebody or like retirees, they finished the school year, you can use, the stop date is June 30th, start date of July 1st. If you continue to pay them over the summer, just to, finish out their pays, that's fine. You would still do, it's always the day after their last check. That may be in August. That's fine. And you can even start entering your termination events now for the end of this current school year, because it's all controlled by the effective pay date, which is the day after their last check. So you're all set. We're going to go back now that we've terminated them to the deduction report. We're going to open June. Again, you must click validate. If we don't click validate before looking at this, it's not going to pull in his termination event we just looked at, and he will still show up as missing. We don't want that because it's not accurate. So we're going to click edit details. We entered the termination. I want to make sure we did it correctly. So I'm going to export the exception report again real quick and make sure he doesn't still show up as missing. Just going to scroll to the bottom. You can see now detention is the only person missing. So we did it correctly. He's no longer a problem. We do still need to figure out why detention is showing up as missing. So she is missing just for 6/25. Why is that? Go to your payroll. Was detention paid on 6/25? See that she actually was. Okay, well, that's good. Did you take MTRS deductions? Again, you're going to look in payroll. You did take MTRS deductions. Okay, so she should be in this report. She is not pulling in for some reason automatically. Again, you do want to address that as an issue in your payroll system. If it's Munis, go fill out the retirement maintenance screen. If it's Harper's, the MTRB tab. Like I said, that may have a new name. Check the boxes. Make sure you fix it so that in July, you don't have to manually add her. She automatically will pull in. So fix the problem. It's only one person for one record, so we're just going to manually add it in here. So we're going to use the add new function. We're going to type in the social. And then you click tab. It's going to pull in the member's name. If that is still their current name, you do not need to fill in these fields here. You're going to go to the record type. You'll see now that there are drop-down options because I have hit apply after all of my changes. We're going to choose normal. What day was she paid? It was 6/25/26. We're going to go to here. We're going to tab over to the regular deduction field. Just look it up in payroll. What was her deduction? 162.67. Tab over. She has no 2%. Tab over. We're going to go to the base 1382.7. Did she have any coaching? No. No retro, no longevity. She did have a stipend. Put that in there. No premium, no ineligible. She is 70%. Her annual salary is 51,357. She's a guidance counselor. You just manually fill it in with the accurate information. She's a contract term of 10, pay frequency 26, and will be paid over the summer. And then we click apply. So if you ever have to add somebody in manually, that is how you do it. If she had 2 checks, you can add the first one in manually and then use the copy selected button to add the second one in. You don't have to do both from scratch. So I'm going to filter for her. I just want to make sure there aren't any errors now that we've added her in. And there is a question while we're doing this. Yes.
Terminating someone that receives a lump sum that's paid on June 30th. Is the date after their final check July 1st or the day after the last paycheck?
For that person, so if it's their last check, it's not the last check you might process for that school year. So if that person's last check was a lump sum on June 30th, then their effective pay date on the termination event is July 1st. If it's somebody you're going to pay over the summer, then it would be the day after their check in August. Okay, so she does have an error, so let's take a look at it. Full-time percentage does not match what we have in the system, so let's go and check that out. My notes say that she is 70%, So she must have been a different percentage before, or I registered her with the incorrect FTE, but I am sure that she was 70% in June. So I'm going to do the OK verified and click apply. So it is very important that you are looking at the missing members list. It can be very helpful if you have a variance between your report total and your payment total. That's always the first place to look, is your missing members, and make sure that those are all accounted for. If they have left, do the terminations. If they're on a leave or on a workers' comp event, send us the form, enter the events, and they should fall off the missing members. If they were paid and had deductions, you're going to want to manually add them in, but also fix the problem at the source. Okay, we're going to go through adjustment records, and then we will be almost done from there. So hang in there. We're in the final moments here. We're going to handle adjustment records. So let's take a look at, we're going to look at two of them. Patrick Pencil is the first one. So what is an adjustment record? Why are you doing it, and when do you do it? An adjustment record is used when you have collected extra deductions that somebody owed from a prior month, or you have refunded them deductions that they owed from a prior month. So if a mistake was made in May and you forgot deductions on coaching and you collected in June, when you collect it, you create an adjustment record. Same for a refund. So if you're collecting or refunding deductions from a prior pay period, you enter it as an adjustment record, and that's in the month that you corrected the error, not in the month that the error occurred. So let's take a look here. So Patrick Pencil, his school rate is 12.84. So obviously we can't skip that. That's over 11. That's not an option. So we would figure out why the deduction is so high. Hopefully you've kept really good notes and you're up to date on your reporting. You know why the deduction is high. It's because he owed money. So Patrick did not have mandatory deductions taken on an eligible stipend from one of his May checks. So you collected the $36.26 that he owed from one of his June checks here. So before we begin the actual steps of creating the adjustment record, you want to check the total at the bottom here for regular deductions and the 2% deductions. Take a screenshot of it, write it down, export it if you want. If you export it, it will only export these two rows to Excel, if that will be helpful for you. It's a bunch of different ways you can mark it down, but just make sure you look and see what they are. It should not be any different when you're done with this process. That's why you want to make a note of it before you begin. So I have my total. It's $468.94 regular, 0.2%. So we're going to make a copy. So we're going to click the checkbox here next to the record in question on June 12th and do copy selected. He now has 3 records, 2 of them for June 12th. It doesn't matter which one you stay on, whether it's the checked one or the top one. Pick one. I like to stay on the checked record. If you click on it, you'll see there is now like a little blue outline around it. So when you're scrolling, you know what row you're to stay on. You would change the rec type to adjustment. The pay date you'll leave alone. That's the day you fixed it. You collected the extra amount on June 12th. We're going to tab over to the period date. So the period date on an adjustment record is the pay date the original error occurred. If you're doing like one bulk correction for multiple pay dates, you would typically use the first pay date as the period date here. Then when you're adding your comment, you can list the whole date range. So his original error occurred in May, on his May, I think 15th. Let me just go back. It was his May 15th check. So I'm going to change it to May 15th. That's the period date. Then you scroll over to the regular deduction. How much extra did you collect? In this case, he owed $36.26. No 2%, so I'm going to leave that alone. He was not paid an extra $19.66. I'm going to delete that and put a 0. The adjustment record does need an earnings populated. So we usually just use a penny. We usually put it in the field that is associated with the error. So he had a stipend he didn't pay deductions on, so we're going to put the penny in the stipend field. If you put it in the base field, it's fine. But if you know it's for stipend payment or longevity or coaching, just put the penny in the proper bucket if you think of it. Everything else is already pre-populated because we use the copy function. So nothing else in the actual adjustment row needs to be done. The adjustment is done. You'll see the total now is different. It's 505.20. It had been 468.94. The reason it doesn't match anymore is because the 3626 is here in the adjustment record, but it's also still up here in the normal record. So we need to break it out. So you would do 252.60 minus 3626, and that's 216.34. And click apply, and you'll see the total is the same now, 468.94. So we know that we've done the adjustment math correctly. It's an adjustment record, so we always need a comment. Should be a good succinct comment, but list all of the relevant information. So Patrick, pencil adjustment on 6/12/26 is to collect short pay deductions on yearbook stipend payment from 5/15/26. So it's telling us when the adjustment took place, June 12th, what it's for. It was for short pay deductions on a yearbook stipend back on the day the original error occurred, which was 5/15. It's short, but it tells us everything we need. Post it, move on. I've already hit apply, so I'm going to go to the next one. This is Sarah Science. She had a refund. So if you're collecting extra, it's a positive deduction. If you're refunding, it's a negative deduction. So let's check hers out. Hers was on the 6/25 paycheck. It seems to be just a 2% collection or refund. We expected 76.92. You only collected 53.84. Why? Again, you have great records. You're up to date. You know exactly why her deduction is low by 23.08. You took 2% deductions on an ineligible stipend back in April, so you refunded the 23.08 that was taken in error. So we're going to scroll over before we begin. Make note of the total. Regular deduction 800, 2% 130.76. Again, write it down, screenshot, export it, whatever you need to do to make sure this doesn't change. We're going to make a copy of the 6/25 record. That's when the refund was done. Check it, click copy selected. I like to stay on the checked row. Change to adjustment. Don't change the pay date. Period date gets changed to the day the original error occurred, which in this case was April. We're going to go back to April. It was the April 16th check. No regular deduction correction was done at all, so we're going to put 0. She was refunded 2% in the amount of 23.08, so it's negative 23.08. She was not paid $5,000 again. And they had accidentally taken the deduction on an ineligible payment. So we're going to put a penny in the ineligible field. You can see now that the total here has changed in the 2%. It had been 130.76. It's now 107.68. That's because the refund is here, but it's also still up here. So here we would add 53.84 plus 23.08. So you put 76.92. It's what the deduction would have been had you not done the refund. And you click apply. And the total again matches 130.76. So we know that the deduction part of the adjustment record is correct. Again, it's an adjustment record. We always need a comment. So we're going to go and add a good comment. Sarah Science. Adjustment on 6/25/26 is to refund. Needs 2% deductions taken in error on ineligible hourly pay on 4/16/26. Tells us everything we need. Succinct, has all the facts. It's good enough. If you're just going to say that you refunded deductions, that's not a super helpful comment to us. We're going to have to ask you questions. When was it for? What day did the original error occur? So just make sure you're putting enough information in the comments so that we don't have to reach out with additional questions. Okay, so in theory, I'm going to hit apply because I don't remember if I just hit it. So no harm in clicking it again. In theory, we think we're done. We think we have corrected all of our errors. We think we have addressed all of our exceptions. We've added great comments. So now we want to see if there's anything we missed. So we're going to run the export summary report here at the bottom because we think we're done. We're hoping it says 0 errors and we're ready to go. But let's take a look. All right. So really what we're looking for here is the errors total. It says I still have 4 errors. So let's go check those out. I thought we covered them all, but let's go check. That's why we always run the error summary at the end. You never know. Sometimes when you're changing information, you might have had a typo, might have created a new error that you didn't notice. So we're going to close this filter here. This is really the one time I do filter by errors because we think we're done, but it's saying I got 4 out there. So let's see what they are and who they're on. So you can go to errors specifically or generically, or you can choose each of the error messages. So I'm going to choose the full-time percentage one. Let's check that one out. Who is that has that message? It's Beth Chemistry. Let's take a look. Is that also? So you can see here actually by doing that, she does have the error I filtered for, which is the full-time percentage doesn't match, but she also has a base to salary error. So let's take a look at what the FTE is. Okay, it says she's 6%. She's definitely not working 6%. That's a little nonsensical. I think it's just a typo. I'm gonna check my records. Beth is actually 60%. I'm gonna change this to 60% and see if that fixes our problem. It is accurate. She is 60%. Let's see if that was the reason she has all 4 errors. Let's see what we have left now. It's saying that the FTE still doesn't match, so she might have just changed to 60%. We're going to do the OK verified. Since I know that 60% is 100% the truth, she was 60%, so it's accurate. We're just going to say OK verified to confirm that it is the proper one. And click apply and see if that takes care of our situation. So that's really primarily when you'll use that export summary report. It's when you think you've done everything. Just always run that before you find out, maybe like I did, that you missed a few things. So now you can see there's nobody listed here because the filter is still on. So again, I think we fixed everything. Let's just run the export summary report again, just to be sure. What's the errors total? 0. Perfect. I know I've already looked at all the exceptions. I have great comments. I'm going to move on. So we're done. There's no errors. We're going to click save. And while that's saving, so the next step is that you want to make sure the deduction report total matches the payment. So you would go back out 1 level to the main deduction report page. You want to look at the total due. So you're not comparing total due with the balance. Those are obviously going to match because we haven't applied any payments to it. The total due column is what the actual value of the deduction report is. The balance would potentially be different if we have applied a check and then maybe sent the report back to you. In this initial stage where we are, they are always going to match because we have not applied a check. So you're not comparing this with this. Those are the same number. It's looking at the same data. You want to make a note of this. Do a screenshot, write it down, and then you want to go check your EFT and payment page. This is a fake school and a fake process, so I don't actually have a real payment to match it up to, but you would go, if you do EFT payments, it will be listed here. We'll show you the reporting period. If you send checks, you can see there are some fake checks listed here. Reporting period, you would check for the reporting period that we're on. I don't have a fake one in here for June of 26, but you would check it. June of 26, what's the value? If it matches, you're good to move to the next step. If it does not match, you would need to figure out why it doesn't match and fix if there's a problem. Maybe there's a typo on an adjustment record, but figure out why it doesn't match. Let us know if you can't figure it out. We'll try and help you. But please don't send it to pending until they match. So in this example, the payment matches. So now we're done. We're going to go to the override field. Again, you change that to yes and click save. If you skip this step here and try to submit it, you will get a message that says there are unresolved errors, even though you just ran the summary report and you know they're not. Check that step. That's probably the step you missed. You're changing the override to yes. You can see it listed here now. Again, that's certifying to us that you've gone through the entire report. You've checked all the annual salaries. Everything's good. You've fixed all the errors, done all the exceptions. Great comments. Override is signing off on that. And then you click submit. And the report will go back. We'll hit confirm. It's going to say it's queued for submission. That means it's on its way to MTRS as a pending report, and your employer service rep can check that out for you and hopefully get it submitted. And that is the nuts and bolts of beginning and end of a deduction report processing. So really just as in conclusion, I just want to say a couple of things. Reminder that the deduction reports and payments are due the 10th of the following month. If you have a hard copy of the training book from the winter of 2021, the last tab 25, if you are particularly new to deduction reporting, there is a deduction reporting checklist. You can actually fill it out, make copies, and check off the steps as you go. It also will reference where in the book you learn about certain steps. The same thing is available in the online version of our book. There are different categories. One of those categories is this checklist. It runs you kind of like the flow of doing deduction reports. So check that out. The most recent version of the book is online. It's obviously much easier to update that in real time. The physical copy of the book is still, I would say, probably 90-95% accurate, still completely functional. If you are brand new and do not have a copy of a physical book and would prefer one, let your rep know and we can get one mailed out to you. But I do want to point out that we have oogles of training resources available online. If you go to our main website, not the part you sign into, go to the employers tab right here. You'll see it highlighted in blue at the top. And then you can see circled in red there, online training and guides. If you click on that, you're going to see tons of videos. We have videos on very narrow topics. We have videos that just kind of go through the basics of things you need to know about the MTRS. There'll be this training on there eventually. There are a bunch of written guides that do the same thing, very specific to certain steps. They also are retiree insurance. If you also do retiree insurance, there are a bunch of guides available for retiree insurance, both video and written. And that concludes the program. Are there any questions? No questions. Excellent. Well, I hope you found this informative. Thank you so much for joining us today for this session. And apologies one last time for the little snafu at 10 o'clock. But hopefully this was helpful for you. So thank you. Enjoy the rest of your day.